All right, what is going on, Discord and YouTube family, and welcome back to another edition of Top Down Analysis with me, T. Hobbs. Today is Sunday, November 9th, 2025, year of our Lord, and as per usual, we'll be breaking down the S&P 500, NASDAQ, and Dow Jones futures. Just as a reminder, everything that I say here is not financial advice. Although, if you're listening to it, you can take it as some level of advice. I'm just not a financial expert, so you shouldn't be listening to me. I'm just a guy on YouTube sharing my thesis, sharing my analysis for my own journaling purposes. That being said, our analysis last week was spot on. We talked about the monthly candle retracing back to 30%, 50%, and we ended up retracing all the way back to about 70%. But essentially, we talked about it just being a pullback, right? We looked at the price and said, hey, if we can get all the way down to here, it'd be a pullback to set the wick for the November monthly candle. As we break down the S&P 500, NASDAQ, and Dow Jones, I'll show you exactly what that means and what my thesis is moving forward. That being said, let's jump right into the S&P 500. On the 3-month chart, as per usual, we start here because, again, I like to take a bird's eye view approach just to give you an idea of exactly where you are, bigger picture, right? Bigger picture, the 3-month candle is barely pulling back into 50% of the previous 3-month candle. If you take a Fibonacci retracement, I'll change these levels here just so you can see the just the 3 levels here, right? So we take a Fibonacci retracement, you can see that the 3-month candle is really only tapping into about 30% of the previous month action, right? And if you think about that from a standpoint of, okay, we need liquidity, right? We need liquidity to continue an uptrend. If we need liquidity to continue an uptrend, what does that say to the fact that the 3-month quarterly candles don't need to go into the previous 3-month candle deeper than 30%, right? If we're not even tapping back into the 50%, what should that tell you about the uptrend? It should tell you that the uptrend is very strong. Therefore, with a month and 23 days left, I still give the nod to the bulls on the 3-month time frame. We go over here to the 1-month time frame, and again, we talk about the same analysis here. The uptrend is still intact back from April. We've been doing nothing but making higher highs and higher lows, failing to get below the previous candle's wick, which is where the sellers should be taking over. And again, the month of October is no difference. The only difference is that we did pull back into a deep retracement, right? Deep retracement means that the liquidity to require to go up higher, we have to dig deeper to find that liquidity, which is a sign that the uptrend is slowing down, but it is not a sign that the uptrend is over. Therefore, we got exactly what we wanted out of price. The monthly candles came back to 50, 61%, all the way to about 70%, or roughly about 50% of the October wick. We immediately found buyers on Friday, right? The rally was extensive. It was like a 1 or 2% rally in less than 2 hours. That is a sign of a strong defense by the buyers. If I'm a seller, I don't want to sit through trades when buyers are defending for 100 points straight, right, on the S&P 500. So for my opinion, right now, with 19 days and 4 hours left, I'm still giving the nod to the bulls on the monthly time frame because they did defend at the lows. They still need to put in a new high, but as of right now, I'm calling this a defense from the bulls. We look at the weekly time frame. Again, we just analyze the chart, analyze the trend. Is the trend still intact? Yes, it absolutely is. If you just draw a trend line, the simplest form of trading, in my opinion, you draw a trend line and you can see we're doing nothing but continuing along that trend, right? You can turn on an EMA, you can turn on a 48, you can turn on a 13, you can turn on a 200, you can turn on a 9. All of these are trending EMAs, and they're going to show you the same thing. The 20, right, is going to show you the same thing, that the market is failing every single time to go lower. Instead, is baiting sellers, right, and then pushing them higher. However, on the weekly candle, you still have to give the nod to the bears on this one because they were able to put in a lower high. They also put in a lower low. They may not have closed down there, but they did put in a lower low. However, the overall trend still goes to the bulls just because of the fact that the bears were unable to sustain this close down here, okay? Moving on to the daily candle. And we can see on the daily candle that the price action is very definitive at the lows. right? You can clearly see that the market was able to defend as soon as it came into this demand zone area. This is the low that brought these new highs. Price came back to the point of origin and was able to defend. If, as long as we can remain above the 56s, then I'm anticipating the same thing, more aggressive rallying, pushing up, targeting all of this liquidity here to the sell side, and then pushing up to make new all-time highs. The market has basically been on a level of repeat, in my opinion. And the more you try to fight it, the more you try to find the top, the more you're going to find yourself being on the wrong side of price, because price is just not moving down in a sustainable manner. Therefore, let's go down to the 4-hour time frame. I'll break out my levels. I'll tell you exactly how I'm viewing the market going into this week. We're on the 4-hour time frame, but I like to view price action on the 1-hour time frame so that you guys can see exactly where my levels are. So we're currently in checkmate. If you want to know what checkmate is, the link to the Discord is in the description down below. No pressure whatsoever. You can join, don't join. It's not going to make me a bit of difference. That being said, this is a checkmate formation, right? What I'm anticipating is a gap up or a pullback into the top of the range to go higher, right? Whenever I see this, I look for the market to continue pushing in that direction aggressively come the Tokyo Open. If that doesn't happen, then I'm anticipating a pullback just into the lower gray box here. And then if that doesn't hold, then we pull back into the 1-hour fair value gap. So if then statements, right? That being said, we're looking this week at plus or minus 2.47% on the weekly projection. If we want to go down, right? If we want to go higher, I'm anticipating the market to do one of two things: either trade down to go up or gap up and go, right? So in this scenario, at the trade down to go up scenario, I'll be looking for the market to tap back into the chessboard low at 67.39, rally up to about 2.47% into 69.0550. If we get the gap and go, then we'd be trading from the chessboard high at 67.6575, targeting 2.46% into 69.32. To the downside, I want to see the market go up to come down to make a bearish wick, continue this continuation, and then continue to the downside. Those two levels that I would be anticipating sellers defending would be the 2-hour resistance, right? The bottom of it and the top of it. I anticipate us at least getting back on the other side of the weekly fib and then finding resistance here at this 2-hour resistance zone. That being said, if we were to turn bearish and get the continuation to the downside, then I'm looking for 2.42% to the downside from the front of the RZ, targeting 68.9150, which again is still bearish in my book because it doesn't break the low, right? Secondarily, that was from the back of the zone. Secondarily, what I would be looking for is a target from 68.27 down about 2.43% into 66 or 66.60.5 or 0.50, right? Again, still bullish in my book because neither one of those projections would have us breaking these lows, which again, I'm still okay with the market coming back down to sweep these lows, right? And targeting this huge demand zone here. But in the event that we don't get that and we just continue to rally, then the first area of resistance would be here. So those will be my levels for the S&P 500 going into the week. Let's move over to the NASDAQ. All right, looking at the NASDAQ on the 3-month chart, again, all we have to do is pull out our fib just to be objective, right? Like I don't really do subjective thought process when it comes to charting. I try to be as objective as possible, right? If the market's going down, I'm gonna tell you it's going down. If it's going up, I'm gonna tell you it's going up. It doesn't matter to me because my goal is to be on the right side of price, not to be right about price, right? So we look at the 3-month candle, right? And again, it's the same thesis. We're not pulling back into anything. We're not even coming back to 50% on any of these 3 months. Every 3 months since April, we haven't needed to pull back into 30%, over 30% of the previous month. This is a very bullish sign on the higher time frame, and as long as the higher time frame is pointing to bullish, we're going to continue to be bullish, right? Like you can fight it, you can try to predict it when it's going to fall, you can do whatever you want, but until this trend breaks, the market's going to continue to rally. It's going to continue to go higher. So we look over here at the monthly candle after giving the nod to the bulls on the 3-month candle. The monthly candle on the NASDAQ is just as powerful, if not more powerful than that of the S&P 500. right? You can see the pullback is coming back to the 70% mark, right? But we're not even though we're back in 70% of the candle, 70% pullback still didn't even get us inside of the wicks, right? We barely tapped into the wicks where the buyers are, and we immediately found buyers down there. Again, yet another sign that the market is still very bullish down here at these lows. The only thing that can change my mind is if the weekly candle gets continuation, right? I.e., we come up here and we fail about 50% of this weekly candle, and then we come down and take out these lows. That's what would change my mind, and we take out this low, changing the character of the market. Otherwise, I'm going to continue to anticipate higher highs, right? But again, just like the ES, the weekly candle put in a lower high, it put in a lower low. So we have to give the nod to the bears on the weekly candle. This could be the start of a downtrend, but until the bears give me some continuation, I'm not going to say it's the start of a downtrend. When I see the continuation and I see the fail retest, that's when I'm going to know that the downtrend is over. I mean, the uptrend is over. Till then, nod goes to the bulls. All right. So we come over here and we look at the daily time frame. Again, tapping into this consolidation. Remember, we consolidated down here for 1, 2, 3, 4, 5 days after this aggressive manipulation on that crazy Friday that everybody thought was the low of the market. We consolidated for 5 days. The result was a manipulation low and then a manipulation to the high, and now an expansion back down, or a retracement back down. Sorry, manipulation low, manipulation high, and then an expansion up. Now we're getting the retest of that consolidation. As long as the lows of this consolidation, and definitely the lows of this Friday candle, holds intact, then that's telling you objectively that the buyers are defending. That's all I'm going to read it as. Now, if we come up here, because this is a bearish candle, right? The candle itself is telling you that the wick is very bullish, but the finish of the candle is very bearish, right? From a candlestick formation standpoint. This is kind of called like a hangman pattern, right? Where buyers get hung out to dry on a Friday, and then, they run it up a little bit, and then by the morning they crush it and come back down. So bears could still take over here. I'm not saying that they can't. I'm just saying right now you got to lean on the side of this winning, right? Until these lows break, I'm going to continue to remain bullish, looking for all-time highs heading into this week and next week. Okay, let's go down to the 4-hour time frame, and I'm going to show you exactly how I'm looking at price based off my top-down analysis and what levels I'm looking for going into the week. All right, we come down to the 1-hour time frame. Again, looking at our chessboard. Again, if you don't know what a chessboard is, it's fine, right? You can join the Discord. The link is in the description down below. If not, you can continue to watch me talk about it on YouTube. All right, chessboard, high and low intact, right? We have a demand zone above us, and then we have a ceiling 2-hour resistance above us. I mean, below us, we have a demand zone and a 2-hour resistance above us, right? So if we're going to remain bullish, we want to see a gap and go, and or the market trade down to go up. And our weekly projection puts us at about 3.33% plus or minus, give or take like 3.36, good enough for it. Never mind, I won't say that here. But anyway, if we trade down into the chessboard low at 24,953.50, I'm looking for 3.36% into 25,790.75. If we trade up as a gap and go, then I still want to see the chessboard high retested. Therefore, I'm looking for a push off of 25,161.25 into 25,099.25. I don't know why I just didn't put 26,000 right there. But anyway, if we're going to be bearish, I still want to see us trade up to come down. The levels above us, we have the resistance zone and the weekly fib. So from the weekly fib at 25,554.25, we're looking for a push down into the previous day low, basically 24,714. And again, these equal lows will most likely get tested. It's just a matter of when they will get tested, right? So the 2-hour resistance will be the next level, taking us down about 3.28% into monthly settlement at 24,905.75. Again, pretty simple. After that liquidation, it makes things a lot easier to kind of adjust to what price is doing and understand the dealing range, right? So essentially, we're either going to attack more to the upside, or we're going to go up here briefly and fail, and then that's when you're going to hear me start to be very bearish on the market. But right now, it's just not time for me to be bearish objectively, right? When that time comes, trust me, I'll be the first bear because I hate when the market gets extremely bullish like this. It's very annoying. But that being said, let's move over to the Dow Jones. All right. So looking at the Dow Jones on the 3-month chart, not to beat a dead horse, but I like to give the same analysis for each instrument, right? We go from the low to the high, and you can see on the 3-month candle, although on the monthly candle, we're pulling back 70%, on the 3-month candle, we're barely tapping into 50% again for every single instrument. Therefore, we're making a higher high and a higher low so far, right, on the 3-month chart. Because remember, we did make a higher high on this candle last month first, right? So now we go down to the monthly chart on the Dow Jones. And again, I look at the Dow Jones as the truth teller of all the instruments, right? When I say truth teller, I mean that it's much more difficult to manipulate the Dow than it is to manipulate the NASDAQ and the ES because there's so many more stocks inside the ES and the NQ. Shout out to my boy Pip, put me on to that logic, right? There's more manipulation that can happen. The more stocks you have, the more they can hide the volatility. They can hide the volume. Because the US 30 is the US 30, right? It doesn't have a lot of stocks in it. It's not as easily manipulated. It is what it is. It's true price action, right? Therefore, I look for this to kind of really lead me on what direction the market is truly going into. And you can see on the monthly time frames, unlike NASDAQ, unlike ES, the Dow is actually stronger than both of them because it's not even pulling back into 70%. It's holding the golden pocket very, very nicely here, which is a good sign on the monthly that we can continue to go back up, but we'll see exactly what happens. Therefore, I'm giving a nod to the bulls on the monthly time frame. We go over here to the weekly, and as I stated before, the Dow Jones is much stronger than that of the NASDAQ or that of the S&P 500. You can tell by the fact that it's holding this level here, right? The weekly time frame is barely pulling back into the previous week, right? The previous week is a doji candle. But when I say previous week, I'm talking about the most recent aggressive candle, right? Which is October 20th. We're holding inside of this area and we're holding at the top of the weekly demand zone. That is very bullish. That means that we're retesting. And the second we retested this area, we found buyers immediately. That is a sign that the market wants to head back up, right? Will it conclude? I don't know. Here's what I do know. The reaction that I don't want to see at lows is consolidation. That's a sign that the market could go lower. However, what I do want to see is as soon as something taps into my area, I want to see the exact reaction that I got on the daily candle out of the Dow Jones. This is the exact candle I want to see. So I'm expecting more continuation, maybe a slight retest into these wicks, but I want to see more pushing going back to the upside. So the nod on every time frame on the Dow Jones goes to that of the bulls. Let's move down to the 4-hour. I'll break down my levels, tell you how I'm viewing price for the week, and then we'll get you guys out of here with a brief breakdown of news and volatility. All right. Moving down to the 1-hour time frame. Again, we are in checkmate on the Dow Jones. Link to the Discord is in the description down below. Below us, we have our floor, 1-hour fair value gap. We have a demand zone beneath that. And then above that, we have a ceiling at the 2-hour resistance level. Okay. So we're looking at plus or minus on the week of 2.26% for the weekly projection. Again, if we want to be bullish, I want to see the market trade down to go up or gap up and keep going, right? So if we're looking at the levels that we can gap up from, chessboard high, 47,082, up 2.25% into 48,137. Trading down to go up, I want to see either the chessboard low hold or the 1-hour fair value gap. I chose the 1-hour fair value gap because the Dow Jones doesn't really like to leave gaps. So 46,831 up to 2.26% into 47,885, right? Either way it go, I think that puts us back at all-time highs or at least close for the week. If we're going to trade down, again, stay unbiased. Just look to be on the right side of price. This is the inefficiency that needs to hold right here for the bears. 2-hour resistance zone, right, at 47,407. I want to see the market trade down to 2.23%. Again, sweeping these equal lows, tapping into weekly settlement at 46,348, right? If we can't even trade up that high, we tap the weekly fib and fail. There's a little bit of wick here, which is indication of some liquidity here. If they take that liquidity, tap into this little gap here area, I'm marking it from the weekly fib trading down 2.24% into 46,161 from 47,222 on the weekly fib. So those are my levels for the Dow Jones, the S&P 500, and the NASDAQ. I hope that was helpful to you. Let's break down my thesis and my analysis that I get from the volatility index. So things to support my thesis, I look for earnings. I look for, earnings season, I look for news catalysts. But for the most part, I'm not really a fundamental trader. I'm an analytical trader. So the thing that I use is the volatility index. If you guys don't know what the volatility index is, again, you can either Google it, you can chat GPT it, or you can join the Discord that's in the link in the description for $40 a month. And I will teach you exactly what it is. Either way it goes, you can learn this information for free or you can pay me to teach you. Either way. Ultimately, the VIX is a correlation directly correlated to the S&P 500 options chain. Therefore, I use it as a relative strength index, right, in correlation to the instruments that I trade. So what is the VIX doing, right? Ultimately, the VIX is in a huge macro range. The green box at the low is the macro low. The green box at the high is the macro high, obviously. From the high, everything below 22,610 or 24, everything below 24,000 basically is a sell. The closer we get to this high, the market should be looking to sell. The closer we get to these lows, the market should be looking to buy, unless the market comes up here and does not make a new high. If it comes up here and doesn't make a new high, that means that the market, when it comes back down, it's about to break through 17. Well, what did we do when we came up here? Right? If we take everything off my chart, the market put in these highs, broke these lows, right? Retested these lows, which should have taken us higher. The fact that we came up here and we failed, right? And we failed dramatically is not a good sign if you're a bear. It's just not, right? The last chance is for these lows to hold at 19,265. If these lows don't hold and we get back below 18, I'm just going to bring my levels back here. If we get back below 18, we're going here, right? We're going to go back to 16 and 15 time frame. And that's when I'm going to start looking for actual calls. But ultimately, the thesis for the VIX is that the VIX should continue to the downside, right? And if it doesn't, and they defend, then stand by. We're going to go back up here and, market's going to fail. But this is how I'm viewing price action throughout the day. And I'm gauging the VIX because the VIX is at a high level now. And you can watch it like on the 15-minute time frame. So I do watch it just to see what it's going to do. If it gaps up, then I know, my overall thesis is wrong and it's time to get on the other side of price. If it gaps down, then I'm probably correct and we're going to continue to go lower. So that's my analysis on the volatility index. Let's jump right into the no news for the week, right? I call it no news because it is a shortened week, but the government still shut down. I mean, it's just daily stuff, right? The government shut down for the longest shutdown in history. But anyway, the Monday is a no news day. Again, Cleveland Fed inflation's expectations, we ain't even going to get those because that's protected by the government shutdown, apparently. November 11th will be a bank holiday. The futures market will still be open. Things will be business as usual. However, the volatility will be much lower, right? So just be aware of that. Veterans Day, I'm a veteran too, so shout out to all my veterans out there. November 12th, we have the 10-year bond auction, which I think, in my opinion, is something, because we don't have a lot of news, it's something you should probably key into, right? At least pay attention and know when it's coming out, because it's going to be around the start of PM session, and this thing could be important, right? I mean, it's just a little bit important, right? People need to show up and purchase these bonds, right? So we want to know exactly if they are, if they're not, like why aren't they? And this could definitely shake the markets a little bit with the markets not getting any other news, right? On Thursday, if we don't have the government open, it's supposed to be a big week. It's supposed to be unemployment claims, supposed to be CPI. They gave us CPI before. I don't know if they're going to give it to us again or if they're going to give it to us late. However, this is going to be tentative. This is going to be a red folder day, but it's going to be tentative. I don't know. You don't know. None of us know when we're going to get this information. So stand by on the news, right? So going into Friday, again, same thing. It's supposed to be a CPI and a PPI week, but we don't know if we're going to get this information. So the news is that's why I call it a no news week. I'm going to tell you what it is, I tell you to be prepared for it, but I'm going to also tell you the government shut down, so you might not get any of it. Right. So as brief as that is, that's the information. That being said, ladies and gentlemen, this is my top-down analysis, and I hope you guys really enjoy what you see. The top-down analysis has been spot on, man. We've been killing it inside of the Discord. We got multiple members getting payouts, getting funded. We keep a very small community. That's why you don't really hear me advertise about it too much, but in the future, that'll change. But for the most part, I really hope you guys are enjoying the top-down analysis. My name is T. Hobbs. This is The Trader Shop, and I'll catch you guys on the next one, man. Peace.